Hey everyone, it's Jay with Ocean Views Real Estate. Today I want to do a deep dive into two of North Carolina's hottest real estate markets, Leland and Wilmington, and compare their investment potential based on the latest market data. As you know, we are surrounded by a ton of beaches, so we have both LTR and STR rental markets here as an aside. This video will discuss long-term rentals where the subject comes up, starting with Leland NC ZIP 28451. First, let's talk about the numbers. The median sale price for homes here is around $382,450. Homes typically spend about 64 days on the market, indicating a balanced pace. Not too hot, not too cold. The supply of homes on the market is roughly 3.91 months, which is fairly balanced and suggests a healthy level of demand relative to supply. Now, what's really appealing for investors? Rental yields in this area are close, around 6.97%. The past year's appreciation has been 1.54%, meaning Wilmington's downtown is growing, but at a more modest rate. The forecasted appreciation is pegged at 1.21%, showing that growth is expected to slow even further, potentially remaining flat or slightly negative in the near term. In the Midtown College area, ZIP 28403, we see a very different story. The median sale price jumps to around $866,500, with properties moving faster, only 53 days on the market, and a lower supply around 338 months, making it more competitive. However, this high-end segment actually saw a 0.06% appreciation over the past year, and the forecast indicates a slight dip of about 0.46%. That suggests some uncertainty and possibly a more cautious outlook for high-end properties here. What does this all mean for investors? Let's compare potential. Leland offers higher rental yields, 7.48%, and stronger appreciation at 2.47% over the past year, with a forecast of 2.29%. Its entry point is more moderate, meaning you can get started with less capital and still see good returns. Wilmington, however, is more diverse in price points, with the downtown offering lower entry prices and strong rental demand driven by tourism and university students. Also, Wilmington has a condo market that Leland NC real estate does not offer. In particular, the historic district downtown Wilmington condos can rent like fire. We used to say like hotcakes in the old days, right? The Midtown College neighborhood, despite its higher prices, may have more volatility, especially with the slight negative appreciation trend. Market conditions favor Leland slightly for investors prioritizing consistent growth and solid cash flow. Its supply-demand balance is healthier, with lower months of supply compared to Wilmington's downtown. Wilmington's higher-end neighborhoods, however, like 28403, are the fastest moving, but have seen stagnant or negative appreciation, so there's a little more risk there. The rental yield in Leland is pulling in around 7.48%, which is quite attractive, higher than Wilmington usually, especially compared to some other markets. In the last year, homes have appreciated by about 2.47%. That's a steady year-over-year growth, which means your investment is not only building equity, but doing so at a healthy clip. Looking ahead, the forecasted appreciation for Leland is about 2.29%. While that's a bit lower than last year's growth, it still signals stable, ongoing appreciation, which is what most investors want. Predictability. Now let's switch gears and look at Wilmington. Wilmington is a bit more complex because it covers multiple neighborhoods, each with its own vibe. Let's start with the downtown area, ZIP 28401. The median sale price here is around $250,000. Homes spend about 70 days on the market, slightly longer than Leland, and the supply sits near 4.79 months, indicating a slightly slower moving market. FYI, this is little experiment with House Canary AI tools of generating real estate market reports for primary home buyers and investors, both long-term and short-term STR. So I promise the content will be getting better.